What's up, what's up, what's up? What's up, everyone? What's up, Dylan? Good morning, good afternoon, good evening, wherever you're from. What's up, Messi? Thank you, thank you. Good afternoon. Love to see it. Good 103, oh really? Uh-huh. What's up, Hope? How are you doing? How is everyone doing? I still have a little bit of a cold, so excuse me for my voice. This is, by the way, the last video with this setup. So afterwards, we just have the normal setup again. The normal microphone, the normal screen. Love to see it. What's up, Victor? What's up? What's up from South Africa? Love to see it. That's insane. What's up, Tori? Where have you been? Love to see it. I'm doing great. Thank you, Moron. How are you? How are you? Thank you, thank you, thank you, thank you. What's up, Fabi? Hello from Amsterdam. From Amsterdam. Love to see it. Oh, I can't wait to be back in Amsterdam. What's up? What's up? Love to see it. I'm doing great. Thank you. Thank you. I'm doing all right. I have a bit of a cold, but other than that, I'm doing perfectly fine. Can't complain. Can't complain. From Rotterdam. Love to see it. Love videos. Do we really need weekly profile to be profitable? You don't need weekly profile to be profitable. The weekly profile will already play out whether you pay attention to it or not. That's the funny thing. Yeah. Love to see that. At Almere. Love to see it. It's very close, actually. I like that. New York. Ooh, New York. Love to see it. So many different people. That's insane. Always surprises me. Absolutely love to see it. All right, let's get it started with the weekly forecast right here. Let's of course start with the dollar. I will go over the forecast list again. I have the chat on another phone right here, so it's not ideal. This is the last video with this kind of setup, so I can't wait to be back home and to do it the normal way again. But it is what it is for right now. So what are we seeing on the dollar right here? On the dollar, I want to zoom out to the weekly, and the reason I want to zoom out to the weekly is because we have a weekly fair value gap that is sitting right there, and that is overlapping with this high right there. We also have weekly fair value gap right there, which is very nice. Now, next week, we have kind of a chaotic week news-wise, because we have FOMC on Wednesday and we have CPI on Thursday. And if you watch the video of the time and price video, then we saw, of course, those are part of the big three. So we want to be careful during those days. At the beginning of the week, on Monday, we have a bank holiday for the US dollar. So it's not an ideal week to trade the US dollar pairs or trade US dollar instruments. We might want to look over to the cross instead. So right here, if we do want to continue higher, then we of course have this weekly fair value gap right there, which we can continue higher off of as well, right there, potentially towards that high. Now, if the daily came into a daily fair value gap right there, if this is creating a new daily fair value gap lower, then we might even continue lower towards a lower target in the form of potentially that weekly fair value gap, or potentially even lower. So that weekly fair value gap potentially. But I would like to see this high, so a fair value gap that is in close proximity with this high right there, seeing that hold to continue higher, because of course that is the fair value gap telling us a story, whether we are sweeping a high or whether we are truly continuing higher. That is very important as well. Then on ES, if we move on to ES, then a nice target for this week's price action on ES is, what we can clearly see, this weekly fair value gap. After that, we can also potentially target that low right there, that order block low. And then from there, we would have to see what the dollar is as well doing. If the dollar is also rejecting all of those weekly fair value gaps, then ES can also reject, and we can finally continue lower off of that as well. But in the meantime, once we have that weekly fair value gap, then that is already a very nice target. That is already a lot to work with, because if we create a daily fair value gap or even 4-hour fair value gaps higher, for example right there, then that 4-hour fair value gap is very lovely to take a trade into that weekly fair value gap right there. That is very, very nice. I do quite like that. Then on NASDAQ, NASDAQ is a stronger once for the indices right now, and it already is inside that weekly fair value gap right there. Currently, it's sweeping that low. We would have to see what we want to do in that weekly fair value gap. Are we rejecting lower, or are we completely disrespecting that fair value gap? I'll show you a great example, and you can study that as well, on how we disrespect fair value gaps. So here on the weekly, I would of course ideally want to see lower prices. We also have that liquidity still on the downside right there. Now, to confirm for myself lower prices, I would like to see some kind of 4-hour bearish fair value gaps. In the meantime, I would want to take it easy, and I would prefer to trade ES to take longs into that weekly fair value gap instead of trading NASDAQ right here. I would prefer to wait on NASDAQ to give me more clear signs on if it wants to disrespect this fair value gap or respect it and continue lower right there. That is very important for me. Then on YM. On YM, we mentioned we had this weekly fair value gap, but that weekly fair value gap is very far. Now we have created a new weekly fair value gap in the form of that weekly fair value gap sitting right there. We're also coming below that low. Again, also sweeping it like we mentioned last week as well. Then here on the daily time frame, we as well have a very nice target. Now, if we, based on the daily time frame right here, if we do reach for this weekly fair value gap, then the chances of us reaching for this weekly fair value gap as well has increased. And the reason for that is because if we look at the daily time frame right here, we don't have any fair value gaps anymore. And what I mean by that is that we have this fair value gap, which we are disrespecting that. So that fair value gap is not even relevant anymore. Then we have this fair value gap already traded into. So again, it's been used up, not relevant anymore. So there's no fair value gaps in this lag lower anymore. Everything that's there is liquidity. We do have that weekly fair value gap, but we also have this weekly fair value gap. So a sting into that weekly fair value gap wouldn't be too crazy actually. So again, here on YM, I would prefer to trade YM and ES right now to look for a trade into that first weekly fair value gap, and then potentially afterwards into that weekly fair value gap as well, if price is showing the right things. Now, what do I mean with price showing the right things? When we come into that weekly fair value gap, for example, here on the 4-hour, right there, we will first have some kind of rejection. If we create fair value gaps lower and we hold those fair value gaps lower, then I want to target these lows right there. If we do not do that, and we don't have a rejection lower with fair value gaps, and we do something like this, we mess around, and we have fair value gaps higher, then I want to get involved on those fair value gaps higher right there, targeting the next weekly fair value gap. Then the next weekly fair value gaps, again, I want to be careful. What are we doing right there? It's the same story on NASDAQ right now. I want to see, are we rejecting lower to actually go lower and target the liquidity, or are we rejecting lower because it's a weekly fair value gap? It's going to have some kind of rejection. We don't need to catch that rejection. We can wait for the higher probability price action. And what we can do is wait for that new fair value gap higher potentially. Then we can look to target higher potentially. That is very important to understand, so you don't get caught up in weird price action. Here on DAX, we are seeing a trade into that daily fair value gap right there. Now, to be honest, if we do continue lower, of course, we have that daily fair value gap. Let's see what we have on the weekly. Weekly, no fair value gaps or anything. Monthly as well. DAX has just been very, very ugly, to be honest. But right here, at the start of the week, I would not expect this daily fair value gap just to hold quite yet. I do think we can target these highs as well to potentially target this daily fair value gap that is sitting right there. And the reason being for that is mainly because it's a very aggressive move into this daily fair value gap. And I also like to use the other indices and as well the dollar to get a better direction on DAX itself. And the dollar itself, etc., and the indices, they are not showing any signs of currently reversing right there. So again, if it does happen, then I would like to go into the 4-hour to see if we have bearish fair value gaps lower. But in the meantime, as well, I would like to stay away from DAX because there are other instruments that are higher probability in my opinion. But if we do want to target the high, then any 4-hour fair value gaps higher right there could be very nice as well. And after, of course, being careful. Australian dollar, US dollar right here. So we have this daily fair value gap. Now, again, if we take a look at the video, or we remember the video about the fair value gaps being high probability and any PD rate essentially being high probability, then is this order block and that daily fair value gap high probability? Not really. And the reason for that is because we have that monthly fair value gap that is sitting above it right there. Now, again, that doesn't mean that the daily fair value gap can't hold, because sometimes we will indeed see that we have fair value gaps holding on the time frame below it, whilst we have a fair value gap above it on the time frame above it, clearly. So sometimes it will hold, but currently we came into that fair value gap once right there. Then the second time, if we look at the wicks, so this is something we teach in the mentorship, that's candle science, so pay attention. We have this candle, that daily fair value gap. What we can see is that we had a huge wick to the downside. So price tells us right there that we came into that daily fair value gap once, then as well into the order block, of course. Then we came into it again right there, and we had a rejection lower. That rejection lower was not followed through. Why is that? Because this is an up candle. Because right there, we have this huge long wicks right there, meaning that right now it is not rejecting lower. It's not following through lower. So in this case, I want to look to target something higher in the form of potentially these highs and that monthly fair value gap right there. Now, depending on what the dollar does there as well, that is very important, of course, because if the dollar immediately rejects higher of that weekly fair value gap, which will it do? Not too sure on it, but it will likely continue lower for a little bit. Then Australian dollar, US dollar can continue higher for a little bit. Then the monthly fair value gap is not an unreasonable target. Again, is it the highest probability price action? That is what I always ask myself. No, that's not the case, because we are still in a premium array right there. So it's not the highest probability. We do have something on the 4 hour, and we are holding 4 hour fair value gaps, which we can see right now. We had one 4 hour fair value gap, second 4 hour fair value gaps. They're currently pushing price higher. Then if we have a new 4 hour fair value gap right there, and a new one right there, then those could be very nice to take trades off of to target that high and that monthly fair value gap as well. So that could be a nice nice trade. Not the highest probability, I would say, but still potentially nice to look at. EU, yes, so this is what I wanted to talk about as well, because if we look at this price action right here, and I mentioned, I'm not sure which, on one of the indices, I mentioned about disrespecting a fair value gap. Not sure which one it was. My memory is not doing well. But on EU right here, I want to go over this daily fair value gap that is sitting right there. And the reason for that is because we can very early already tell if it wants to disrespect that daily fair value gap or not. So this is something I went over with the money making team in the mentorship. And I said, because if we look at the 4 hour right there, then we already had a very aggressive move higher into that fair value gap, into the daily fair value gap right there, on the 4 hour right there, creating this is a fake top right there. And then we close above that fake top, which already, the things that go through my mind right there is that we are completely disrespecting that daily fair value gap already with that move higher. Now, of course, doesn't have to, but once we close above that high again right there, then that's not something I would like to see, because the target as well was this monthly fair value gap, which was pretty close already. So for us to completely disrespect the daily fair value gap is not something I like to see. Now, what we can do, of course, is the next target is that high right there. And afterwards, we can potentially continue lower off of that as well, keeping in mind that we have a weekly fair value gap sitting there as well. So again, same story as on the dollar, essentially right now, where we can have a sting into those fair value gaps and then continue lower as well. The sting might be a little bit higher, because then it could reach for this low that is sitting right there as well. And I would expect lower prices somewhere around there. So at the beginning of the week, you might look to take a long. Now, be very careful this week with US dollar instruments. Mainly everything here on the forecast list is US dollar instruments and US dollar pairs. Be very careful this week, because we do have a lot of news, and a lot of news is not bad, but the big three, we have FOMC the day after, we have CPI. So that's already 2 days that is lower probability in my eyes and based on my data. Then we also have USD bank holiday, which of course is not ideal, because if we want to have volatility in the market, because we need to trade with volatility, then a bank holiday is not that ideal. So that is already 3 days that is lower probability. Then we have 2 days left. That one day, that is Tuesday, that is after a bank holiday. So again, there's also not a lot of volatility. I didn't actually look at if we do have US dollar news during that day, but it's before FOMC as well, and before CPI, which I also don't like. So then we have Friday to work with potentially. And again, that is what we need to be aware of. For the actually highest probability price action, we might have to look at Friday, which of course is not ideal. But this would be the scenario in EU. Now, what you can do, if you struggle with the higher time frame, then the higher time frame, or trading the higher time frame during a week like this, where we have quite a lot of news in the form of the big three, then it's great to practice, because you get your answer pretty quick. Because they are, of course, CPI, FOMC are very volatile. So if you do your higher time frame analysis, then you get your answer pretty quick. The only thing is, of course, don't try to execute on it with your high time frame and actually execute on the news itself. That is very important. So that is the same thing. We go on to the GU. Then we also had this daily Vervia gap right there. And we had this weekly Vervia gap sitting right there. So when we had this daily Vervia gap right there, could it push price lower? Yes, it could. It could. But let's pay attention to what we are doing on the 4 hour right there. We had an aggressive move like this into that daily Vervia gap again. So my mind already, once we had this move, was like, I'm not too sure about shorts anymore. I would ideally even want to target that weekly Vervia gap that is above it right there. So that would be the next target for GU. And then after what we saw as well, during NFP, we came into that daily Vervia gap right there. Sure, some of you probably caught a trade right there after NFP, of course. And we could target the weekly Vervia gap that is sitting right there, because we were already disrespecting that daily Vervia gap that is sitting right there. So if we look at the story again, disrespecting, first, it actually starts here. Disrespecting this daily Vervia gap, so this Vervia gap is now higher probability. Disrespecting that Vervia gap, so this Vervia gap is now higher probability. Then we continue higher off of that eventually to target that weekly Vervia gap right there. And we could already tell that this Vervia gap is lower probability by the fact that we were disrespecting it, or had a very aggressive move into that daily Vervia gap based on the 4 hour right there, creating a fake top, which I didn't like. And ahead of NFP as well. USD Canadian dollar right here. USD Canadian dollar is currently coming above that high, but on a daily time frame, we have, and this is the most important time frame for me currently, I would want to see higher prices off of this daily Vervia gap that is, of course, overlapping with the bigger mitigation block as well. Now, again, that might not happen, and I do realize that, of course. But if that doesn't happen, then we might be able to target lower prices as well. If we get bearish Vervia gaps again, and we are respecting that those bearish Vervia gaps, then I would look at lower prices. But in order to continue higher, in high probability conditions right here, I would want to see price continue higher off of this daily Vervia gap that is sitting right there. Now, does that mean I immediately go into the lower time frame right now to look for an entry pattern? No, because of course, it's always important to understand when you create a trading plan, or you have a trading plan, you need a boundary to go into the lower time frame. That's always what you need. That is very important. You need a boundary. So what is a boundary for me here? Well, since the dollar could still navigate lower for a little while right here, then USD Canadian dollar right here, I just want some extra confirmation. That extra confirmation will be given to me by waiting for a 4 hour Vervia gap higher. Only one single 4 hour Vervia gap higher. That 4 hour Vervia gap higher, that is where I want to look for a 5-minute entry pattern. That's it. So I already know throughout the week what I want to be looking for. But of course, keeping in mind, I also want to have the days on my side, which is very low probability during this week. But that is what I would want to see as well. Then on USDJPY, it's also very, very weird, to be honest, because we had a huge wick lower, which I just don't like. It just messes with the price action right there, but we can still continue higher as well off, of course, the weekly Vervia gap, which we essentially just came into. Then right now, we also have all the 4 hour. This is why I don't like the wick, because it becomes very unclear. So what I tend to do is I just tend to ignore the full wick right there. or tend to ignore the full candle and just use with whatever we are doing right here. Now, if we're looking at this, then we have fair value gaps higher. Again, with the US dollar potentially continuing lower for a little while, I don't really like the price action right here currently. If we can create daily fair value gaps higher, I would like to trade off of those. But currently, I just want to wait a little bit on USDJPY. I don't really like it. Again, overall still bullish, but I just want a clear discount array that we can trade into to target that high right there. That is what I want. Then on silver. Silver, we came into the low of that fair value gap right there for the week. We had a very slow week. Now, right there, if we do take a look at this price action, we have a weekly fair value gap that is sitting right there, which we can reach for. Then we also have a daily fair value gap that is sitting right there. Now, we can continue lower off of this daily fair value gap. Yes, we can. But keeping in mind, that is lower probability because we have a weekly fair value gap sitting right there. And what we mentioned last week actually was that if silver comes into this daily fair value gap, so one of the daily fair value gaps that is sitting right there, and with the overlapping lows, that could be very nice to see lower prices off of. Now, it is not a daily fair value gap, but it is a weekly fair value gap. So if we come into that weekly fair value gap that's sitting right there, which I would prefer over that daily fair value gap, overlapping with the lows, then that could be very nice. That is what I would love to see, targeting those lows, because I do not think that is the low, but I want a clear premium array right there to continue lower off of. Now, again, because we have quite a lot of price action to work with here, if you're not sure when to go into the low time frame, then a rule I live by is, and it's very easy, once we come into that daily fair value gap or we come into that weekly fair value gap right there, all you would have to do is wait for a 4-hour fair value gap lower and just trade off of that. That is as simple as it gets, and that is very effective. Then you wait for that 4-hour fair value gap. Inside that 4-hour fair value gap, you wait for a 5-minute entry pattern. That's as simple as it gets. And that is, again, when in doubt, I always tell the mentorship, when in doubt, just wait for a new fair value gap, which usually is a new 4-hour fair value gap, and look for an entry inside that. It's not when in doubt, wait for a new 1-minute fair value gap, because of course that won't work. Then on gold right here, we also have this weekly fair value gap that is sitting right there. Then on the daily, we have this daily fair value gap. Let me remove some things. I can't take it. I don't know about all of you, but I just can't take it where my chart is so full of lines and rectangles, and there's so much going on. And it's only 15 things, but there was too much going on for me. So we had this low target. Essentially what I'm doing right here, this is basically my top-down analysis. I have my drawn liquidity, and which also I discussed in the time and price video. Drawn liquidity, PD array, entry pattern. Drawn liquidity is where are we actually going? Where are we most likely going? Which the fair value gaps are telling me. Fair value gaps here are telling me that we are going lower. So we are likely heading towards that low. Why that low? Because that is the discount array. If we have a fair value gap below that low, then we can likely target that in form of that monthly fair value gap that is sitting right there as well. Now, why this monthly fair value gap? Why not that monthly fair value gap? This monthly fair value gap has already been traded into. So it failed to create a new monthly fair value gap higher, already indicating to me that this low is weak right there, and that we could trade into the next fair value gap that's sitting right there. So those are my drawn liquidities. Just very simply, actually, looking at what is current price action doing. Is the trend, I think when you start off as an investor, at least it's what I did. When I started off, which was a few years ago, and when I looked to buy stock, I just looked at, is it going up or is it going down? Of course, the worst investment strategy there is. But it was funny because essentially what I'm doing right now is I'm looking, are we going up or are we going down? The fair value gaps, of course, it's a bit more advanced. The fair value gaps right there are telling me that we are going down. So we have this weekly fair value gap, drawn liquidity, PD array. If we are going lower, where are we likely going lower from? That fair value gap right there. Then on the daily, I also, of course, want to incorporate the daily. If we are going lower, where are we likely going lower from? Daily fair value gap right there. Hey, now we have two fair value gaps. So which one are we actually going lower from? Well, I would always prefer the higher probability fair value gap is the one on the highest time frame. So that weekly fair value gap is the one on the highest time frame. So I want to prefer that because it's just very simply based on data, it's higher probability. So again, we like immediately go into the 1 hour to look for an entry pattern, or go into the 15-minute. Not necessarily. It's a very big weekly fair value gap as well. Why not just wait for a new 4-hour fair value gap lower? Then we have enough price action to work with that is way higher probability than to take 15-minute entry pattern hits right there, then take a hit right there, then take another hit right there, take 3 losses, and then catch a winner for 1 to 2 RR. That is -1 R. It is very important to understand about trading. We can get the right moves, as in the forecast that we're doing right here is not that difficult. As in, yes, we are likely continuing lower after that weekly fair value gap. If you want to be a trader, then it's important to know that we want to take as less, or we want to minimize the hits that we take before we can call the right move. Because what you usually see is people are not that bad at analyzing the market. Analyzing the market is not that difficult. It's just knowing, all right, what are we doing? Where are we likely heading towards? It's really not that difficult. But actually getting involved on the move, that is what requires just simple guidelines. Simple guidelines. Because what I could also tell you is, yes, here, look immediately at the 15-minute time frame and then look for an entry pattern. That will likely give you 2 losses or maybe 3 losses before you actually catch the right move. So that is what we don't want to have, because when we take those 2 losses, we might already be in a state of revenge trading, and we might not even catch the winner because we might just blow our account. That is very important. So we want to minimize the hits we take before we take a winner. That is very important, which in this case you would just simply do by waiting for a 4-hour fair value gap lower. And what you can do, you can even wait for a new 4-hour fair value gap lower and then get involved on the 5-minute in that new 4-hour fair value gap lower. You have enough price action to work with, so wait for that high probability price action. All right. Bitcoin. Yes, on Bitcoin, we had this month fair value gap. Now, it's 2 scenarios for me. It's either we create a new daily fair value gap lower, then I would say I'm pretty confident in targeting those lows. If we create a new bullish fair value gap higher right here, above that high right there ideally, then I am pretty confident in trading towards this monthly CB. So again, it's a very mechanical rule. Fair value gap lower, bearish fair value gap lower, of course bearish fair value gap lower. Then right there, I want to look to target those lows. Bearish fair value gap higher, not bearish fair value gap higher, bullish fair value gap higher. Then I want to target that monthly CB right there. In the meantime, I wait. I don't do anything. I sit on my hands. I trade something else. I don't do anything. That is very important. Crude oil. So we came into which was our target right there. And this is funny, right? This is what we talked about in the fair value gap video. This is exactly what we talked about. We either continue higher off of this right there, or we continue higher off of the overlapping part. But we are not continuing higher off of this fair value. That fair value gap is not even a fair value gap. You could see it as I ignore that fair value gap. It's nothing. It's useless. It's irrelevant. It's futile. It's nothing. Because this is one, that is also one. So we're not going higher off of that. Then the small part that is in between, that right there, is also one. We're not going higher off of that. So if we are going higher, we are going higher over off of an overlapping part that is sitting right there. And it's also a monthly fair value gap right there. So we can continue higher right now off of that. Now, we had a very aggressive move lower as well right here. Will we again go into the lower time frame to look for higher prices right now and just try to call the bottom? No, just wait for clear fair value gaps higher. Once you have this monthly fair value gap, if the monthly fair value gap wants to continue higher, then it will continue higher and it will target this high and it will target that fair value gap right there. So in the meantime, if we just create a daily fair value gap higher, then we have so much price action to work with. You sacrifice a few days to just get high probability price action. That is what we're doing right there. So that is very important as well. So here on the 4-hour, you could also go into the 4-hour, look for 4-hour fair value gaps higher. Currently, there's no reason, there's 0 reason to look for an entry pattern just yet. That is very important to understand. So there's no reason to go into the 5-minute, the 15-minute, or whatever. There's no boundary to go into that. Still, we are bearish right here. once we have clear signs of being bullish, which I would prefer because we of course have a monthly VWAP gap right there, then I want to look at higher prices. But right now it's waiting. It's waiting to see if we get bullish signs. Nifty, yes, perfect. So Nifty, I would still prefer going lower off of that weekly VWAP gap right there. Just purely based on the fact as well that we are very deeply retracing into that order block. We swept that high right there. Still the same premise as last week. And then we still have that monthly target right there as well. There and there, which could be very nice. So weekly VWAP gap right there. That is what I want to look for lower prices. Then if we do take a look at the daily, could be very nice to deliver into that weekly VWAP gap as well. So if you do want to take a look at a long, potentially you can look to take a long into that weekly VWAP gap right there. Then potentially after that, of course, you want to look for a potential entry pattern either on the 1 hour or the 4 hour. And again, when in doubt, just wait for a new 4 hour VWAP gap lower. And that makes it very easy to take a trade off of that. So that is exactly what I would do right there. All right, let me open up the chat. See, what are we doing? What are we doing? Oh, CHFJPY. Let me see, Koen. Let me see. Let me see. Let me see. Yes, perfect. This is very interesting. I love that you asked it. Thank you. So we came into that daily VWAP gap right there to continue lower price towards that monthly VWAP gap. So currently what we outlined last week as well, and maybe even a few weeks before that, we're currently perfectly doing that, which is absolutely lovely because now we are having that monthly VWAP gap and we are having a huge rejection higher. Now, excuse me. Again, the same premise as what we saw on crude oil is we have this VWAP gap and we have this VWAP gap and we have that VWAP gap. Which VWAP gap do you use? First VWAP gap, if we are continuing higher, is this VWAP gap right there. The way we can see that is by going into the daily time frame, etc., the lower time frames right there. With lower time frames, I'm saying the time frames below the monthly, which is the weekly, daily, 4 hour, not the 1 hour, 15 minute, whatever, etc., etc. So here, if we go into the daily time frame, we are creating daily VWAP gaps higher. That is very interesting. Of course, not confirmed yet, but something crazy would need to happen for us not to confirm a daily VWAP gap higher right there. So if we sacrifice Monday, and I'm not sure for CHFJPY where the news days are for this week, because I haven't looked at that just yet. Let me actually look at that. Would make it way more. Because we talked about time price, why not look at it? Let me see. Forex Factory, what are we doing? Let me remove some things. Apply filter. We don't have a lot of news for CHFJPY at all from what I'm seeing. Or maybe I'm in the wrong, but all right. It's a bit of a shame. Bit of a party pooper. But right here, if we are creating a daily VWAP gap, then right there, you would sacrifice Monday. So you don't do anything on Monday. Then at Tuesday, you have a nice VWAP gap to trade with potentially. Then after that, if we do sting into that at the right time, of course, then we can look to continue higher prices towards that monthly high right there. And then afterwards, we want to be careful again. So this is looking very nice, actually. I like this a lot. I like this a lot. This was as well a short opportunity right there. Right there was a short opportunity right there, which was very, very clean. Very clean as well, but let me yes, perfect. Let me remove it. Voila. So right now I would look at the higher prices potentially off the daily VWAP gap that's being created right there, and then look to continue higher towards that high. That is very nice. I like that a lot. Looks very nice. Patience is the key. Exactly, Adam. That is absolute facts. That is very underrated. Patience is key. Very, very underrated. And it's difficult. It's probably the most difficult part of trading as well. And the reason, again, the reason why people fail at trading is not because the technicals are difficult. Believe me, they aren't. You can get as crazy as you want about the technicals, and that's probably also a psychology error. That's not something good, in my opinion. But everyone can understand the technicals if they try their best. And psychology is the difficult part because a lot of people are not patient. don't have the discipline, that's where they mess up, right? That's very important. I did not cover EURGBP yet, so I will go over it. Let me see. Past few weeks, I've not looked at EURGBP because I didn't like the price action. But let's see what we're doing right now. Have we improved in the meantime? Let me remove everything on the monthly. Still the same old ugly monthly. We are coming above that high. Weekly, we have... Is that even a weekly value gap? I don't think it is, right? No, it's not. All right, but we are sweeping that high. That's the only thing I currently see. We're sweeping that high. So on the daily time frame. All right, the thing that goes through my mind right here is we have a daily value gap lower right there, a new daily value gap lower after sweeping that monthly high. A new daily value gap lower. That would give me the confidence to potentially target the lows. But again, keeping in mind, if we apply the loyalty test, as I like to call it, is EURGBP has not been following through on a lot of fair value gaps here, as in on any PD rate in general, not necessarily fair value gaps, because we have not been following through on the lows, we've not been following through on the highs, we are constantly sweeping everything. So being very careful that we can even apply a range right there, the quadrant range, that we can target the 0.5 level, the equilibrium right there, and then after we want to be careful. So if we have a daily value gap lower in the form of that daily value gap lower is where I would want to get involved to target the 0.5 level. Nothing more, nothing crazy. That is where I want to be very careful. From Kenya, love to see it, my friend. Love to see it. GBPUSD, let me see, Mac. Let me see. Let me see. We had the weekly for value gap that's sitting right there. Let me remove everything again. The weekly for value gap is sitting right there. Then we also have this weekly for value gap that is sitting right there. Let me look at the economic calendar again. Okay. Yeah, the thing I'm seeing, Mac, on Australian dollar is that which I was also interested in, that is why I wanted to trade potentially Monday and Tuesday. When you have, that's also time and price. When you have Australian dollar news, usually what you'll see is Australian dollar news is very late in the day. As in, it's somewhere 10 p.m. New York local time, etc. So what you'll then see is that Monday is tradable, where you have the actual news event, and that the day after, the London session, that New York session on the day after is also very tradable. So that is where a lot of the volatility comes in. So we had red folder news on Monday, and yes, that Tuesday as well. And after they died down, so because the rest of the week we didn't have any news, but that Monday at 10 p.m. New York local time, so very late in the day, we had news. Then Tuesday we also, because we still had the volatility from late in the day, that Monday news. That is also very tradable. Targeting that monthly fair value gap right there after sweeping the low we talked about right there. Or wait, no, I had this low right there. My bad. Yes, perfect. So that is what I would do as well. Now, if we have the volatility, again, we can see how important the volatility here is. This is what and I probably should have showed you an example as well in the video, but I didn't. This is what you'll see. When you don't have news supporting the ID and you do have a daily value gap. So price here is perfect because this is a daily value gap I would actually take. It's a daily value gap, a trade I would take to target potentially that weekly value gap right there. Because we are disrespecting that weekly value gap. It's a trade I would take. But I would avoid it at that time because we don't have news supporting the ID. So that is when news becomes very important. And this is what people tend to neglect. And sometimes, don't get me wrong, sometimes we have Mondays where I see a lot of people trading Mondays where we don't have any news supporting the ID or we don't have anything supporting the ID. We just have price. Yes, it can play out. But the thing is, people love to brag on Twitter, Instagram, or wherever, whenever one single Monday plays out. And they're like, oh, who told you to not trade Mondays, blah, 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 blah. And again, don't get me wrong. If your data supports it, you do you. I'm not complaining or anything. It's just that you need to zoom out. Just because one Monday played out, or just because one day ahead of NFP played out, That might mean that one day out of the 10 days played out. Because it's not binary. Trading is not binary, it's probabilities. And that's what a lot of people don't seem to understand, or they seem to forget. It's all about probabilities. So once we do come into that daily fair gap, the probability is that we are likely not having the volatility to expand higher because we don't have new supporting ID. Can we see an entry opportunity? Can we see some kind of move higher? Yes. But the probability is that we are likely not expanding higher. We always want to look for the highest probability. So this is exactly what you'll see, is that we have some misery, small movement higher, no new daily fair gap created higher as well. And then as well, once we do have new volatility in the market, then we can do something like this and then continue higher again. Now, does that mean that you use this daily fair gap again to look at your new 15-minute entry pattern or whatever? No. You just wait for new fair gaps higher. So a new 4-hour fair gap higher, that is the minimum for me. That could be very nice. And you can see here, that fair gap higher, again, it's a beautiful fair gap. Price is agreeing, time is not agreeing. Because time right there is not having the volatility to push higher. And that is why I also mentioned that, especially with what we're doing right here, and in general, if you're scalping on the 1 second, etc., then this is also important to know, that you need to know which day is likely going to expand, because the kill zones here are completely irrelevant. But right here, once you have your news day, and then the kill zone is irrelevant as well, because it's just getting in, because the day is going to expand higher. If you actually look and you gather data on it, which I've also done, of course, which I've just researched it, that if you look at the news day, where we have news or economic calendar supporting the idea of trading that day in general, doesn't matter Asia session, doesn't matter London session, doesn't matter New York session, that day in general will already be more volatile, except for the big three. The big three will only be more volatile after the fact, after the news release has happened. But on unemployment claims, whatever it is, just simple red folder, GBP news, $20 news, then the day itself will already be more volatile. That meaning that you can already look to trade an Asia session, a London session, a New York session. It's just whichever session stinks into the PD rate right there, that is the one you can trade. You can see here, if we go into the lower time frame, that the kill zones are not that relevant. As in, a lot of people here would expect a sweep of this low right there because it's Asia session, or it's close to Asia session right there. That's not how it works, because if Asia session just creates a fair value gap higher, then this low will be protected. So you can wait for ages for price to take it out, but it's just not how it works. So that is why the whole characteristics of London needs to sweep the Asia session, it needs to do this, we have a weekly profile, and we need to do this, it's not relevant. It's a pain in the ass. Believe me, I've been there, I've done everything. I've studied this for an insane amount of time. So again, it's just not relevant at all in my opinion. But if you want to use it and it helps you or makes you feel comfortable, then go ahead and use it, I guess. That's just my thoughts. It's the same because we had a question at the beginning of the live stream, a very early question about, is the weekly profile, are they relevant or are they needed for you to take a trade? Or in general, are they needed? No, they're not needed at all. And the reason for that is because I've also made videos on it. And that's just because to get your mind sort of right. Because I have had the phase where I need you to understand, when I'm teaching something, I sort of teach it power of 3 as well, because I've also gone over that. And you know, if you've been here for a longer period of time, how much I dislike the power of 3, how much I dislike a weekly profile. But I do still teach it. And the way, or the reason why I teach it on free YouTube, I don't teach it inside the mentorship. And the reason for that is because I need you to understand my mind. Once I came into this thing where I incorporate every concept, but I don't need to reference it, then I first need to understand the concepts that I don't want to reference. So in order for me to not reference them, if we look at the weekly profiles right there, we could have said that this was going to be a Tuesday, Wednesday, half the week. Now you can know that by looking at the weekly profiles. All right, where do we have the volatility for that particular week? So let's actually look. Let's just look. Would make it more fun. Let's see if we do have news supporting the IT. let's see, that is the September, last week of September, GBPUSD dollar. Yes, perfect. So we have Australian dollar CPI on 8:30 p.m. New York local time. That is what I meant with 8:30 p.m. New York local time. So that's very late on that Tuesday. Then that Wednesday will also be very volatile. So once you have news supporting the ID, we have news. Perfect. We are coming into that PD array. Perfect. That is where we want to see lower prices off of. Perfect. We look for our entry pattern right there, which, if I remember correctly, some of the members also caught this right there. On the 15-minute, we had a few entry patterns right there. We had, let me see, where are we? Right there, few entries, I believe, and then eventually this is one a lot of people caught there as well, I believe. And then we continue lower. Now, the weekly profile, what is it? It's a Wednesday high of the week and Friday low of the week? Yes. Is it relevant for you to know that? No, absolutely not. Because if we just looked at the daily value gaps combined with price, then we already look at the weekly profile automatically. But we don't need to know, or we don't need to study. Is it going to be a consolidation and Thursday reversal and blah, 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 blah? No, you don't need to know that. But that is the way I view it as well. Again, if it makes you comfortable, then using that, be my guest. But just know that if you're using it, and that is the thing I always warn about in my mentorship, if you're listening to me and you do want to listen to me and you want to follow my teachings and you do then incorporate other things, then just know you're likely incorporating it twice. Because if you pay attention to the weekly profile right here, but you also incorporate my teachings, then you are paying attention to the weekly profile twice, meaning that one of them is wasting your energy, which, of course, I'm biased. But I would argue the weekly profile that is not incorporated in trading plan already, so not mine, is wasting your time right there and wasting your energy, which means you have less energy to focus on your psychology, which automatically the psychology part, that is the most important part, because that is why the most people fail in trading. So that is very important to understand. Let's see. Yes, yeah, that's the thing. I did mention it, but not that great in the video, Mukesh. That's a great question. And can we trade in news also? So it's important to understand that NFP, CPI, FOMC, that is where you want to avoid trading before the news release and during the actual news release. So what you'll see is on, I don't know, EU, I am not looking at the 15-minute to try to catch a short right there during the actual NFP release. But afterwards, once we come into a discount array, which is just that daily value gap right there, and I'm expecting I was already expecting a higher price of that. The thing you need to understand with news is that price agreeing is just looking at charts and seeing, all right, what are we likely doing? Then news agreeing is just having the exact same price that we already want to have, but news is just going to be the accelerator of doing that. Whereas why don't we want to execute on the big three, NFP, FOMC, CPI, is because there's no risk management involved. Because if we took a long right there, for example, we looked at this leg higher, we had a fair value gap, should hold right, and we got taken out, then our stop loss is there. Now, unless we're on demo, we might actually get stopped out right there. Perfect. But if you're trading a real account with real capital, with a lot of money, with maybe investors, how are you going to tell your investor, oh yeah, I just took a long during CPI or NFP and I got filled right there and I lost, I don't know, lost a few thousand of your money? How are you even going to say that to yourself? Now, to yourself is of course easier, but still, you're going to be a little disappointed in yourself, because what are you doing right there? You're maybe risking 4% to make 2%. That's minus RR. That's not how trading works. That's gambling. So that is very important to understand, because in order for us to pull that off, we need to almost have a 100% win rate, which will just not happen. Which is just the truth of trading right there. So then eventually we do continue higher, and this, after that move, is perfectly fine to take a trade. Now, for everything besides the big three, so besides NFP, CPI, or FOMC, you can execute before, during, or after. So that is perfectly fine. Unemployment claims, there's no need to worry unless you have a very shitty broker or very shitty prop firm that you get slipped. but the slippage won't be detrimental to your account. So that is important to understand, that you can, for unemployment claims, I don't know, durable goods, something like that, you can trade or enter before, during, after, because that day with unemployment claims, the whole day will already be more volatile. So even though the news is in New York for unemployment claims, London will also be more volatile during that day. So then you can also, if London gives the setup, you just execute in London. That is very important. That makes sense. Oh, I'm sorry, Huang Pam. I'm sorry if I mispronounced your name. I'm sorry. When price approaches a high target PD rate, how do you tell if it's being respected or violated? I see that you use candle closing, wicking confirmation, but is there something more to it? We go in depth on it in mentorship in candle science, but of course I can also touch on it a little bit here. So if we look at EU right here, and the reason why I wanted to see higher prices right there is because we had this daily VWAP gap. Now, for us to come into that daily VWAP gap right there, there's a few things to understand. I look at the daily VWAP gap as my PD rate to continue lower off of. To target, first target that low, and then second target is that monthly VWAP gap that we had right there. So I look at the 15-minute right there. I won't tell you my exact entry pattern, but I'll look at the 15-minute right there to look at my entry pattern. Once I see that during London, wherever or whenever we come into that daily VWAP gap right there. So when I went into the 4-hour first, I already saw that we had a huge move higher. And look at this candle close. It's fully almost closing halfway off that daily VWAP gap right there. Then already my mind is like, that's a bit weird. Because why is it pushing so aggressively higher if price wants to continue lower? Doesn't make sense. Now, the next thing, which confirmed it for me, sort of, was going into the 15-minute time frame. And once we went into the 15-minute time frame, the thing I saw is that we had this daily VWAP gap. Then on the 15-minute time frame, this is my entry confirmation time frame for the daily VWAP gap. I had this, we had this right there at the end of London already. We had this move lower right there, which didn't create a VWAP gap. Then we had this VWAP gap lower. Then we had another VWAP gap lower right there. That's already two VWAP gaps. Two potential VWAP gaps that it tried to push lower from. Afterwards, we had this huge move higher again, while still being in a daily VWAP gap. Then we had this huge move lower right there. Once we had this move low right there, even before that, I already mentioned that I don't want to trade this. And the thing that goes through my mind then is that if it was another week, yes, might have still played out. But the thing right there is that we had NFP on Friday. So I mentioned right there that we will likely stay inside that daily VWAP gap until we have NFP and then we get a real move. So that is what happened right there. And the reason why I knew, or I didn't know, again, it's all probabilities. It's not me. I'm not a god. As in, I'm not saying I knew this was going to happen. No, there's just a probability because I've seen it happen, play out a lot of times before. There's a probability, there's a high probability that we will disrespect the daily VWAP gap just based on the fact how we were acting on the lower time frame right here inside the daily VWAP gap. Because let's look at the Utopia version. If we were to continue lower right there, then we would have likely already respected either that VWAP gap or that VWAP gap, created a new VWAP gap lower, and we would have seen an entry pattern already happen right there. But it didn't do that. So because it didn't do that, then it would have been, then my mind is like, all right, we're not respecting the daily VWAP gap as well, based on the 4-hour, seeing how the 4-hour closes inside that. That is not high probability. That is disrespecting. That is early signs. Again, that is not full disrespecting it. That is early signs of disrespecting a daily VWAP gap. Very early signs. Then afterwards, when we fully disrespect it, of course, when we have a candle close, this right there, and above it is the ultimate disrespect, of course. But early signs are already that first close, second close right there, last close right there. That makes sense. How can you contact me personally? The best way you can contact me personally is by sending me an email. I mainly go over my emails as well for mentorship questions and people that that are interested in that. Thank you, Marianne. Thank you. Thank you. Bank Nifty. I did. If you scroll back a little bit, SRVN, then did I do Bank Nifty or is it different Nifty? Right there. I'm not sure if that's the right Nifty. Gold. Yeah, sure. I'll go over gold at NFP last week. So this is also pretty fun. Now, excuse me. Let's look at this price action right here. So the thing, of course, I already know what I'm going to tell you because we have this daily Verwijl gap right there, which we could just navigate towards because that is very obvious, right? We have that daily Verwijl gap. Verwijl gaps are so easy. They're so nice to trade with. I love them. And then we have a little bit more difficult. We have a fake bottom right there. A fake bottom is something I go over in the mentorship. It's just how you can spot, or it's not really how you can spot. It's just a helping hand in how you can spot a real top and real bottom in the market. Same for that. It's also a fake top. Then the same for that. It's also a fake top right there. Same for this is also a fake top right there. And they get swept before the real top actually happens or the real bottom actually sets in right there. So once we have this sweep right there, then that day, this day is not closing. So that Thursday is not closing below that low, which already tells me based on, I wanted to say candle signs because it's a candle signs mentorship concept. But based on candle signs right there, it already tells me, all right, we're likely sweeping that low. So, because that's a fake bottom, that already gives me two thoughts. We might be first navigating towards that daily Verwijl gap before we continue lower. Or, what we have above it, of course, the weekly Verwijl gap as well. So, during NFP right there, what is happening? Before NFP, it's important to understand that we have Tuesday, Wednesday, Thursday being a consolidation. That is important to understand. Why is that important to understand? Because that is what happens a lot of times with the big three. So CPI, FOMC, NFP, we can have consolidations. Now, not always, but we can have consolidations ahead of the week. The way we can know if we are consolidating is by knowing the PD rates. And what I mean by that is, of course, as well knowing Verwijl gaps. Because the way we know that we are consolidating is by the fact that we are not following through on PD rates. Meaning, we are not following through on that Verwijl gap lower. We are not following through on that Verwijl gap higher. We are not following through on that Verwijl gap lower right there. We are not following through on PD rates. So we're not pushing price. We are not creating new Verwijl gaps off of these old Verwijl gaps right there. Meaning that we are consolidating. Consolidating in NFP week. Price will likely wait until NFP until we have the real move right there. Because that is where the volatility comes in. Price is just held in a consolidation until we have the right move. Chopping out both sides of the market. And then we have the real move. Now, we mentioned that we had that daily fake bottom right there, which could be a daily discount rate to push price into that daily Verwijl gap right there. It's that Thursday. We had price agreeing, but we didn't have time agreeing. So that Thursday, that low is also a discount rate because that is just liquidity. The same as what we saw on NASDAQ when we look at the actual video. The same. That low becomes liquidity because there was no time agreeing. So there on gold, that right there, that low can be your PD rate, aka your boundary to go into the 15-minute time frame or into the 5-minute time frame. So once you look here, Verwijl gap higher, perfect. Don't do anything just yet. Wait. NFP was right there, perfect. That right there is perfectly fine entry. That right there is a perfect entry. And then eventually you can look to target the daily Verwijl gap right there or even a little bit higher. Now the RR here is not that great. 1-to-1, you can be profitable with 100%. What you can do is, of course, because it's fractal, you don't have to enter on the 15-minute time frame. That 15-minute time frame, that 15-minute Verwijl gap, what is it? If there's nothing below it, no 1-hour Verwijl gap below it, so automatically no 4-hour Verwijl gap below it as well. So that 15-minute Verwijl gap is high probability. It's in context, etc. So right there, what you can do is, again, that is a boundary to now go into the 1-minute time frame. So on the 1-minute time frame, we are likely seeing an ST. Oh, did I do something? No. We are likely seeing an ST. This is your ST right there. Then that is your second entry right there, or even on that Verwijl gap, as long as you make sure to cover that low right there. Perfectly fine. 2 entries that are sitting right there after NFP. Now, of course, you would have a little bit of patience. And that is the thing that I need you to understand as well. You basically target that high or even a 1 to 2, simple 1 to 2. You don't even need the 4R, simple 1 to 2 right there. Look how, you just need a small rejection right there. That's all you need. It's very, very high probability. These trades are extremely high probability right here. Very beautiful delivery as well, because we have volatility. And when we have volatility, then price delivers beautifully. So that is how I would go about it right there. That is very nice, actually. Very nice. Very nice price action right there, of course. All right. Interesting. Let me know if that makes sense. And again, the thing I wanted to say, just lost my train of thought right there. The thing I wanted to say is that this fair value gap, or even this move, when we have NFP, you don't necessarily need to get involved below that low. That is a lot of turtle soup, etc., which you just don't need. The higher probability and the even better returns usually are when you have patience. That fair value gap, the second fair value gap even, not even the first right there, that right there is extremely high probability. Get great returns, because what you just saw, you could maybe, if you were to catch both those trades, you held them to the daily fair value gap, you had maybe what was it, 8R? That's insane. That's insane for a Friday right there. So again, that is where patience comes in, because essentially what you did, we tend to forget, and that is why demo and backtesting is very dangerous, because you tend to forget right there that you were waiting a whole week. You were even waiting for that NFP release for that exact fair value gap to then execute on it. That requires a lot of patience. That, and some in the beginning, and that's why live trading is very important, not financial advice, but in the beginning you might even miss the move right there because you didn't pay attention and you didn't know where to expect the move to happen. That is only things that is being taught, that can be taught through live experience. So that is also very important. Ooh. How deep do we need to go into the fair value gap on a higher time frame? Ideally, not super deep, not deep at all. For example, right here, what you're seeing here on gold would be perfect. If we had this daily fair value gap right there, and we had a 50-minute fair value gap or fair value gaps lower, we had our entry pattern right there, would have already been perfect. Even that sweep of that fake top that is sitting right there, that's not a real top, then even that happening will be perfect. The thing is just, it really depends on what are we doing inside the daily fair value gap. So are we already creating bearish fair value gaps and we are sweeping those again, so the bearish fair value gaps are not following through? That is not what you want to see. But if we come into here with an aggressive sting, we can even close it right there. And once we then have bearish fair value gaps and we are holding those bearish fair value gaps, that's still completely fine. It's just more so the fact, all right, what are we doing? How are we navigating inside the daily fair value gap on the lower time frame as well? That makes sense. That's the important thing. Trading is a game of probabilities. As you learn skills and master, you need exactly. I have looked at COD data quite a lot. I used to do it a lot, ahead of every week actually, for my trading plan. But from what I noticed, my COD data was just confusing me. And the thing I noticed for COD data is that yes, it's somewhat valuable, but usually price action on the chart is the way it shows will already play out, no matter what the COD data is showing you. Meaning that the COD data, if it was the opposite of what the price was actually showing me on what it wanted to do, then I would not take the trade, or I would just wait, because I was like, no, the COD data is saying this, but then usually the actual price action just played out the way it should, because the price action was supporting the ID. So that's why I don't use it personally, because it just tended to confuse me more than it did any good. I know where it's Wendy. I won't. I don't think the FBI is after my ass or anything. I can tell you maybe a fancy story where I don't know, I'm here in Colombia because, you know, I'm running away from the CIA because I'm exposing the market secrets. No, I'm just a random guy. anyone can do what I'm doing, believe me. It's just I just spend a lot of time doing it. That's it. Let me see. Bank Nifty is on another index. Okay. Okay. Let me see, what are we doing? Monthly is not really continuing high right there. After that, no Fair Gap that is overlapping. Next Fair Gap is that Fair Gap that is sitting right there. On the weekly, what are we doing? We have this weekly Fair Gap. They're sitting right there. I would say the same as on Nifty, as in if we can trade into that weekly Fair Gap that is sitting right there, I would like to have lower prices off of that right there to target. First target, very easy target, would be the low that we're leaving behind, and these lows right there. That's mainly it. That's mainly it. Then on the daily and the 4 hour, this is all liquidity for me right there, because we have that weekly Fair Gap. So the only thing relevant is that weekly Fair Gap right there. So I would be waiting for that right there. What are your thoughts on ICT Expose video by Iman Trading? Ooh. I have watched the video actually, and I usually don't really like to watch those videos because it's just, I don't gain anything from it. As in, again, ICT, the concepts that he's teaching is absolutely fantastic. Although I do not agree with everything that he does, but again, you always agree 100% with a human? Probably not, but I'm very grateful for him teaching me the basics, which I'm very happy about. Of course, very grateful. Can't complain about that. Can't discredit the man in that sense. Everything he's done in life, is that good? No. Every human has potentially done some wrong things. Again, I'm just happy with the concepts that I've learned from him, and other than that, I don't really want to get involved with the whole ICT man himself, because I also don't really agree with a lot of things he does. He teaches some things, but again, that's the only thing. I'm still happy the way he taught the basics, and I learned the basics from him, so very happy. And other than that, the reason why I don't really like to watch those videos as well is because I did watch this video, but I really don't like to watch those videos because they're negative, and I don't gain anything from it. As in, everything that I see taught to me works for me, and that's all I need to know. So I don't really need to know more about his whole backstory and what he's doing, etc., because I don't really even actually follow him anymore. So in that sense, just learn the basics from him and run away with it. That's all you need, right? So yeah. Is every high news swipe liquidity or not? That's a great question, and I don't think it is. Or I can confidently say it's not. Because sometimes we don't know whether price will run or will sweep liquidity. Running meaning that price will continue in that direction. So for example, if we had this daily Fair Gap on the dollar right there, and we go into the 15-minute time frame, then sometimes we will see that price will respect this Fair Gap and we will continue higher. That all depends on what is the high time frame narrative, what are we doing in the meantime, what is the candle signs, what are we doing with this daily Fair Gap. We can already see this daily Fair Gap was not respected on that Thursday right there. That already gives me an indication that if we are sweeping those highs into the daily Fair Gap, then that could be your liquidity sweep to continue lower as well. So that is more so the thought process. But it really depends on the high time frame narrative and whatever the high time frame is doing, etc. What are the PD rates doing? Are they getting respected? That is very important. So not every sweep, it's not that we can just take buy liquidity or sell liquidity. Even I haven't tested it, and it could be a profitable strategy. Who knows? But that you just have buys liquidity, sells liquidity on chart, the entry pattern could be profitable. I don't know. Might be profitable. I'm struggling with inducement. What is your thoughts, Ario? Yes, I've also gone over inducement, and believe me, maybe what is it, 2-3 years ago, I've studied the absolute, and it's the same basically as turtle soups. And I don't like both, and I'll tell you why. Because if we have a daily fair value gap in the form of this fair value gap that is sitting right there, then that daily fair value gap right there, that will likely push price lower. That is what we established, because we're disrespecting that daily fair value gap. All right, on the 15 minutes, we have inducement in the form we have liquidity below that fair value gap. We will always have liquidity below that daily fair value gap. It's the same with if we have a 15-minute fair value gap. So if we look at NASDAQ actually, or even look at gold, because we just had that example. This will have 1 minute inducement in the form of 1 minute swing lows right there. Liquidity. Voila, voila. But it's just not relevant. It's just not relevant. The only thing relevant is just that 15-minute fair value gap right there. And it's knowing that between that discount rate and that premium rate, that is where the fair value gaps, etc., get respected. Inducement is probably one of the least relevant things in trading that is being taught, and it's the same with turtle soups, because turtle soups, and that is, I started that at the beginning of my YouTube. It's one of the things I brought up a lot of times because it's just really not that relevant. When we look at this 15-minute fair value gap and we enter on the 1 minute swing low right there, because that is our turtle soup, then it's not really a turtle soup. Yeah, on the 1 minute it is. But again, on the 1 minute, you wouldn't even have a great stop loss, because a lot of people think when you enter like this and you tend to catch the low, which of course you can do, but if you just have a little bit more patience and you need to cover your stop loss with the fair value gap at least, then you will get tagged out for your 1 to 2 right there. Whereas if you just have patience and you waited for a 1 minute simple ST, not even market structure, just a 1 minute simple ST, then right there, you would have already gotten tagged out for your 1 to 2 right there. You just have a little bit more patience. Turtle soups is more so a way, I don't know. For me, correct me if I'm wrong, because I know some people like to use it and they tend to see it more, but for me, turtle soups always felt like it's more so a marketing strategy and it's more so a way to show off than it's actually a great way to enter. Because once we have this turtle soup right there, we are just entering off of the 15-minute fair value gap. So we're just entering off of a 15-minute fair value gap higher. That's it. With the overlapping part, we could even use right there. So it's not really a fancy concept right there or anything. So that's just the way I view it. But again, if you use it, then go ahead. But inducement and turtles for me, it's just not really relevant. I am from Amsterdam. I'm from Amsterdam, from the Netherlands. Yes, yes, yes. Yeah, sure. Sure, Murthy. Sure. So I assume you're talking about gold, right? Why we would wait for the second fair value gap right there and not the first fair value gap. So why not this fair value gap? This fair value gap, if you use that fair value gap, you can take it, but just know that the first fair value gap that is being created is always lower probability. And that is why in my examples as well on YouTube, I like to say, take that second fair value gap, because that second fair value gap coming off of that first fair value gap, this is extremely high probability. That fair value gap is so extremely high probability, of course, with the rule that we haven't come into the daily fair value gap just yet. That is important. But this will oftentimes also fail a lot of times. So yes, your RR right here might be greater, but it comes at a cost of a lower win rate. So the thing that I like to say as well in the mentorship is that usually what you should aim for as a beginner, and when you're just starting out, not necessarily beginner, but just starting out being profitable, try to aim for a high win rate, not necessarily a high return, because that high win rate will assist you, because it will assist your psychology. When you have this, again, this is a great trade. Once you have more experience, it's a great trade to take, essentially. And then going into the 1 minute time frame there as well. That is a great trade. Great trade. you can for sure take that if you would have gotten tagged in somewhere along the right there. But it is lower probability, and the reason it's lower probability because price is not confirmed bullish right there, and that's a mentorship concept we use as well. It's called order flow, which I don't teach on YouTube necessarily, or maybe in a little bit of hidden, which I don't try to, but it's just don't really go over it on YouTube. But after that new fair value gap higher right there, that is where order flow is actually confirmed. So we can confirm, we can almost 99, almost 100% say that we are heading towards that daily PD rate right there. Just because order flow is confirmed. Here, order flow is not confirmed just yet, just at the first sign. So that's how I would go about it. That makes sense, of course. Where was I? What's up, Andy? How are you doing, sir? How are you doing? Happy to see you. Good afternoon. Greece from Chile. Love Chile. Do I pronounce it correctly? Love to see it. Love to see it. What's up, Nurit? What's up, Nurit? Nurit? You're starting much better, bro. How you say who's, bro? My guy. How are you doing? I'm feeling good. The only thing is I have just sore throat and very cold. That's it. But other than that, I'm feeling great. Just a little bit annoying. But yeah, can't explain, of course. Yeah, exactly, Flippant Fox. Exactly. And the thing I didn't mention this, but the thing I also feel like is that people always try to discredit someone just because they don't want to put in the hard work. And what I mean by that is, you'll see maybe in the comments under my videos as well. I don't know. Maybe there is someone, but usually it's just someone frustrated with themselves because they can't put in the hard work and they just blame someone else for not putting in their own hard work. So what a lot of people tend to do with ICT is the first reaction is, no, it can't be that good, it can't work, it can't do this, it's just bullshit. And of course, not everything might be true, but the basic fact is that the concepts do, to an extent, if you don't take it too crazy and you know what you're doing, they do work. So to discredit someone, and I always feel like people just want to discredit someone because they feel like, yes, I don't want to put in the hard work. It's easier to just blame someone and tell them, your stuff doesn't work, so I don't have to put in the hard work, than to say, damn, his stuff works, and now I have to put in the hard work, otherwise I'm just a loser. And that's the basic thing. That's what you'll see a lot of times as well with every teaching, not necessarily trading. Yes, candle science is in my essential course as well. Hope, the best thing you can do is trade the next day. The first day, you can already trade it for late Australian dollar news, but the best day is the next day, once the news release has happened, of course. Yeah, exactly, Daniel. 100%. 100%. Ooh. Excuse me for all the snorts and all the coughs. Oh. Yeah, wait. E-quantum trading, 100%. You're 100% right, my brother. 100%. And that's also the reason why Turtle Soup is very fancy. As in, me entering off a fair value gap, it's really not that fancy, but it works great. Whereas Turtle Soup is really fancy, works great. I would argue there is more cons to it than pros. So, but marketing-wise, Turtle Soups, oof. Don't get me started. Meron, I don't. The way I always describe it, I don't teach everything that is in the mentorship on my YouTube, but once it's funny because I do actually, but not in. How do I explain this? The way I teach it on my mentorship is the structure. The structure is truly on the next level, and some insights you are not getting on YouTube. But in my live streams, I would argue, and I think Moneymaking team members can argue, that I tell a lot of things in the mentorship that I also tell on the YouTube live streams. The only thing is, that once you join the mentorship, you are sort of, you have your mind set open to actually realizing the insights that I'm giving on YouTube. They make more sense after that. That makes sense. I do have a trading strategy, Nurit. do you mean that I could give you a trading strategy? Love it, Marina. Love to hear that. Love that. Love to hear that. Let's see. Yeah, exactly, Zeus. Yeah. Let's see, Murphy. Let's see. Last question for me. You can always send questions. Again, I don't mind questions at all. It's just sometimes it's very chaotic. So if I miss some questions, then it's nothing personal. Truly, it's nothing personal. I know you have said backtesting a bad idea. Hindsight backtesting is the way to go. Can you do a video on taking an example of how one can develop edge by hindsight testing only? Yeah, that is a great idea. And I could potentially make a live stream on that as well. That would be love that. That would be lovely. But yeah, hindsight testing for me is, for example, what we did on gold right here. That is more so hindsight backtesting, where we look, all right, what already happened in this move right there? How can we confirm that with our concept ideas to sort of go over and to reinforce, to train our mind to see the entry pattern? But the reason why I would do this in hindsight and not necessarily backtesting, because backtesting, it's just, backtesting just, it builds very unhealthy habits, like I talked about as well. And it just doesn't help, in my opinion. Whereas hindsight backtesting, the thing that all the discoveries I've made is, of course, through forward testing as well, but it's mainly because I did deep work sessions on hindsight backtesting. That is where you can truly see patterns evolve. And that is very important. And then you apply those patterns in live trading. And at the beginning of live trading, you will struggle with hindsight backtesting because, of course, it's way different live trading. But slowly over time, you will actually start to implement them and you will learn how to implement them the best. And that is where the losing curve happens. You first lose, break even, then a winner. So that is very important. Diego, I will. So everyone should come to Colombia. The food here in Colombia is absolutely insane. I've never had such good food here in Colombia. Or in general. Food in Colombia is, I've never had, again, I've not been everywhere, of course, but so far from the countries I've been, the food in Colombia is like, wow. It's all fresh. It's not processed weird things. It's truly beautiful. And the place where I've been is Armenia as well. It's absolutely beautiful. It's very calm. The only thing I don't like is spiders, but I'm just maybe a little bit of a a little bit of a pussy because I hate spiders. I can't stand spiders. There was a huge spider in our room and I was like, oh no, I don't like this. But the women, the woman, but the food is absolutely crazy. From Brazil, love to see it. I bet the food in Brazil is also crazy. In whole Latin America, it's just, yeah. EURGBP, let me see. Let me see. Ah, this is this pair, yeah. So the reason I say that is because when I go onto the weekly and I do my top-down analysis, the thing I already don't like is that look at this price action. That's insane. It's actually insane. That's crazy. That's crazy. But if we do take a look at the daily, then we just swept these lows right there. So if we have a daily VWAP higher, then I think it's very realistic that we can target those highs finally. So a daily VWAP here, right there. Off of that daily VWAP targeting those highs, that could be very realistic. Yeah, this price action on the weekly is, oh, this barcode price action. When you go to the supermarket, grocery store right there, they'll scan this and you'll probably get a tomato or something. Let me see. Let me see. My nose. Let me see, Marian. How can we daily fair gap? You must perform for 3 candles. Oh yeah, the potential daily fair gap. Sorry. Yeah, I need to mention that, Marian. You're right. The potential daily fair gap. So once I already have in mind that once the daily fair gap closes right there, or Monday close, then we have a daily fair gap to work with. So that is what I would use in that case. Sometimes I go too fast. Sorry, I need to mention that. Yeah. US 100. You also let's go over that. Let's see. Basically NASDAQ, of course, right there, where what we can expect for the open. Let's see, we have the weekly fair gap. We have daily, potentially creating a daily fair gap. The thing that's more so difficult here for me is that we are inside a weekly fair gap, inside premium, and we're not really rejecting currently. The thing at the open, what we could see is potentially a little move down into the 4-hour fair gap to continue higher off of that. But again, premium and discount. So this area right there, sort of no man's land, as in it's not really high probability because we have two forces. We have a premium force and a discount force, which create balance. That balance right there creates consolidation. So that is not high probability. So what you want to wait for is clear premium, clear discount, which if we look at ES, for example, US 500, then right there, we are not inside a premium array right there. So then this only has one force, which is only discount array. So right there, it becomes very easy to trade into that weekly fair gap. So that is the thing I would look at right there. But if we do continue higher, NASDAQ, YM, or US 100, then I would look at higher price off of this 4-hour fair gap currently at the beginning of the week, afterwards seeing what we're doing. Yeah, it's exactly that. It's like 50-50. It's very 50-50. Australian dollar JPY. Let's see. Yes, this is monthly. We were aiming for that high potentially. Then on the weekly, I mentioned we did not create fair value gaps. We do have a sweep below that low right now. And on the daily, I mentioned last week that I really like this price action right there. After Monday close like that, of course, I'm not interested anymore because we're completely disrespecting that, everything there. But right there, once we are sweeping that, I would still prefer higher prices here. And the reason being for that is because overall, we are on the weekly and monthly, we're still bullish somewhat, even though we don't really have clear fair value gaps. I could see this as a sweep right there to continue higher. If we create a new fair value gap right there, then I would look to trade off of that potentially, but don't really like that. Don't really prefer it. Exactly, Marian. Yeah, love that. What's up, Nando? Your son? That is insane. We have a mother and son here, or is it just? Wow, that's insane. Actually, I like that. Premium means yeah, premium in this case. When I refer to premium, I refer to the premium as in the PD array. So that for fair gap, indeed. Yeah. Canadian dollar CHF. Let's see, Nick. Let's see. Let me see. What are we doing? Yeah, this one is oof. This one as well. At the beginning of the week, I think I removed it from the list because I didn't like it anymore. We had that weekly fair gap, which I did quite like to push price higher right there into the highs, because on the monthly we were disrespecting everything here. But we are also disrespecting this weekly fair gap right now, which already leads me to think, all right, disrespecting monthly, disrespecting weekly. What are we doing? We have this daily fair gap to work with. Can we push price lower? Oh, not too sure. Very, very 50-50 here. What I would want and what would give me more confidence in this case is, again, when in doubt, just waiting for a new fair value gap, a new daily fair value gap in this case. Because if we create a new daily fair value gap higher, then I would again say, all right, it regained my trust to target those highs. But if we have a new daily fair value gap lower, then I would say, all right, we are actually still targeting first that weekly fair value gap, of course, but by the time we create a daily fair value gap, we likely already reached that, then we can still potentially look to target those lows right there. So that is how I would go about that. I don't really look at, so when I refer to, it's Friday, Daniel, when I refer to premium and discount, I personally don't really look at premium and discount as in I draw my things right there. The main thing that I go over is that I go over, is the fair value gap, is it reasonable to push price lower already? So what I mean by that is, that's the things I'm teaching more on YouTube as well, is that, for example, we have this low, which was drawn liquidity, very obvious drawn liquidity. Then we didn't reach that just yet. Then this fair value gap is a premium array, but it's not a premium of this leg right there. But it is enough to push price lower because it's very close. The first fair value gap we encounter to push price lower right there. And then we can, we wouldn't expect a retracement into that fair value gap because then we would expect that high to get taken out right there. So that's how I would go about it. Now, the way you can use premium and discount is if you have this, for example, but the way I view it is premium and discount is not that relevant there, because the thing is that if we disrespect this first fair value gap, we don't continue higher off of that, the price will reach for an overlapping part. The overlapping part, 99% of the time, is already in discount or premium itself. So then it's sort of the premium and discount is incorporated into the trading plan, but it's not really relevant. That makes sense. Love to see it, Nick. Love to see it. Love to see it. Wow. My mother and I studied trading together. Wow, that is insane. That is insane. I love to see that. Never seen that before. That is very, very nice. I like that a lot. Oh, I love to see it. Love to see it. So is something new coming in your life? And now if not, then I'm moving towards your YouTube playlist video to study. Yeah, you can use A to Z guide, it's of course great. And then afterwards the new videos. Oh, Wendy, don't get me started. No, you don't need fair or you. Oh, wait. Let me say that correctly. You don't need SMT. You don't need SMT. Correct. You don't need SMT. Fair value gaps, indeed, all you need. Yeah, AK. Yeah, exactly. So overlapping PD rate. What I mean by that is an overlapping PD rate is always at least a fair value gap, but that fair value gap makes one. Then the second thing that needs to be overlapping can either be a mitigation block, breaker block, order block. That's it. Swing low, not really overlapping, but fair value gap with either order block, breaker block, or mitigation block. That's it. And that creates then two PD rates. What's up, Sean? How you doing? Love to see it. Love to see it. Thoughts on Israel war? Oof, that is a difficult topic. To be honest, it's very easy for me to say, of course, and I hate to see it. I of course wouldn't want it to happen, but I am in a pretty privileged situation where I don't have to worry about war. So I also don't like to look at other people's war that they are fighting, because it's something negative, of course, and I can't really do anything about it. So it makes it very difficult for me to talk about it, to think about it, because it just affects my mindset, whilst I can't do anything about it. So that's with a lot of things. That's why I don't really like to focus on it. So I don't really have thoughts on it myself, because I don't really follow it as well. But again, if you're in the war itself, then of course my prayers go out to you. That is absolutely, it's a very sad thing to happen, and I don't like it at all. War is absolute. It's you can see it like it's two men that are angry at each other fighting, but they're not even fighting themselves. They're sending innocent people to fight. It's absolutely insane to think about it that way, but it is what it is, unfortunately. Thank you, Moran. I try to be best, of course. I'm still pretty young to be the best gentleman I can be, but I try to be. War is evil, 100%. But the people make a lot of money off of war, so it will always keep on happening, unfortunately. But it's very sad. It's very sad. Joe, if yes, the reason I'll explain this as well is because I've made the mentorship more expensive as well in the past, and it's not necessarily that I feel like I want to make the mentorship more expensive. Of course, yes, I make more money. I'm not going to lie about it. In that way, I also make more money. But it's also the fact that the masterclass is very exclusive, as in the enrollments are not constantly open. So the supply or the demand is going higher every time I do open it. So in order to keep the supply the lowest, I also want to, and it's not fair. I know it's not fair because I know there are people that just can't afford it. But again, I'm sorry, if I were to live in another country where I wasn't reliant on the euro, then again, I might have made the mentorship at different pricing. But again, it's unfortunate I do live in the Netherlands, where I just also have to pay things. So yeah, it's just the reality of things. But in that sense, to answer your question as well, yes, the mentorship is going to be more expensive in the future. And that's just because the demand is going to be higher. So the supply, I want to keep the supply lower as well. But again, I will, of course, as well give the opportunity, because that is why I provide so much free things on YouTube, because YouTube is truly all you need. It is truly all you need. But Joe, if you do want to get the right pricing, what I always try to tell people, or what I do, because I am an honest person, I truly am. If you email me at info@ario.io, I can see that we emailed in the past. So the pricing we have right now will always be available to you. If you find me at a later time and then the pricing is different and we haven't had contact earlier, then it's just the recent pricing. So that is how I try to keep it honest, because you've already found it in that sense. So I can't say to you, all right, but we need to have some confirmation of that. I know you've already found me earlier, so that way you can send me an email. What's up, Fabian? I'm currently in Colombia as well. Love to see it. Love to see it. 95 likes or 170 plus watching. Hit the like button before I send you a losing streak for a month. Musa. That's crazy. Love to see it, Murphy. Love to see it. Welcome to the team. If there's anything you need, again, feel free to reach out to me in my email as well. You too, Anush. Anush from India, if I pronounce that correctly. You too. How was the trip to Colombia? It was lovely. Although you need to understand, I'm 2 meters. I'm very white and I'm very European. So when I walk through the downtown of Bogota, I get a lot of ice. And I don't really mind ice, because when I was in Thailand as well, I got a lot of ice as well. But when I was in Thailand, I was walking around with 2 other very big guys, which were 2 friends of mine. So when I get ice, I'm like, all right, nobody's going to really try to hurt us or steal anything from me, because we are 2 or 3 guys from all 2 meters, big guys, so nobody's going to really try to hurt us. But here in Bogota, of course, I'm walking with my girlfriend, who is originally from Colombia as well. So then I'm like, I don't feel really safe. But again, I'm currently in Bogota as well. So, and other than that, of course, it's very beautiful. It's absolutely beautiful. The food is great. Absolutely love it here. Absolutely love it here. Colombia has the best cooking. Gringo, yeah. Yeah, I already have a girlfriend. I already had a girlfriend before coming here. So yeah, it's not the reason why I came here. But it is true. You're not wrong. Why is everyone so damn tall? I don't know, brother. I don't know. I actually saw something on that. And when I came here, the people say, oh, it's the milk, it's the milk. But it's not really the milk, as in, I don't drink a lot of milk, to be honest, but it could be, or the cheese, or all the things we have. But what I saw as well in a video, I don't remember which video it was, it's also natural selection, from what I saw. Because here in the Netherlands, everyone is tall, so people tend to also, of course, find a man or a woman that is taller, because they may find it attractive, more attractive. So then it becomes sort of a natural selection thing. Ooh. Mario, send me an email. Send me an email. I'll not go over it, because I need to check that from a different side as well. We come from Vikings. I like to believe, Wendy. I like to tell myself I come from Vikings. because it's pretty cool. But I'm not sure if I come from Vikings, but it could be true. Could be true. Oh wait, there's a. Let me see. Let me see. The little avocado. I love avocados, man. I love it. It's very nice, actually. Love to hear it, Dennis. Love to hear it. Oh. Voila. Oh, I like that. You in Pablo Escobar country? Yes, I am. I am. I was actually in the same hotel as he stayed at. I found out later where he stayed for a long time because he was hiding. Oh, that's a great question, Anush. At what stage did you realize that you must stop watching new content from ICT? So that was at a stage where I was like, I am getting overwhelmed with every single concept because I knew I had the knowledge. I had the knowledge to potentially make it work. But I was still looking around for new things potentially. And then after a while, I was like, I think the next step for me is to just stop watching ICT at all. And from that moment on, the only thing I did was apply the knowledge I already had and did deep work sessions, so sessions in where I studied on my own the concepts, etc. From that moment, I skyrocketed. The knowledge, etc., everything skyrocketed. Love to see it, Emrich. Love to see it, man. Appreciate it a lot. Appreciate it a lot. San Andres Island, where is that? Will I get killed there? Or what is that? Let me see. Mathieu van der Poel. The great trader. Is he actually a trader? Or is it a joke? Because he's like a bicycle. What is it? Bicycle riding thing. No, I haven't been in Medellin. I've been in Bogota in Armenia, but he was here in a Bogota hotel actually. The loss that you had in trading career, like in the initial stage of trading. So, well, first, let me tell you how it started. Of course, I think it's very relatable in a sense. In my experience, when I started out trading, I thought I was going to be the man in just a few months' time, which I got, which was the furthest from the truth. And the worst thing that actually happened is when I started out trading, I got funded. I actually got funded. So I found a profitable strategy, and I wasn't profitable because I sucked. I had trade plans somewhat, was not a great trade plan. It was very vague, too much rules, too much things. I just did something and I got funded. Then I bragged about it. I bragged about it to everyone I knew. I bragged about it to my friends. I was like, I got funded, I'm going to make so much money, blah, 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 blah. And then I lost it all the next week. I blew it all the next week. And it's very funny. And later on, I read some books as well. And the reason I say that is because ever since then, I don't like to brag. Because ever since I brag or I tell people things about accomplishments I do have, then for some reason, it always gets taken away from me. And I don't like that. So I don't like to tell it anymore. And the thing as well, a lot of losses, a lot of blown accounts. Well, of course, just the usual blown accounts. And learn from it eventually. And then now we're slowly here. Of course, there's a lot in between that area as well. But yeah, the initial stage was just losing and just being an idiot, essentially, not knowing what to do, not really having a guide as well, a mentor to help me, what to do. Just messing around, losing a lot of money. Your voice is breaking. Ooh. As in, is it I'm not sure if my internet is working all right. Yeah, Alistair, that's also what I think. And again, I gave my opinion on the Iman video a little bit earlier, but from the videos that I have watched from Iman, they are very negative. And again, of course, if that's the content he wants to push out, it's perfectly fine. But it's it's just very negative content always. And it's sort of a gathering of all people that are trying to be negative together. It's like, all right, let's just all be negative together and not reach anything. It's like, yeah, I don't know. Mic is off? No way. Let me see. Ah, wait. Hello, hello, hello. Yes, hello. I should be back. I think it was picking up my laptop's microphone instead of my headphones. So yeah, I should be back. I should be back. All right, perfect. But what I was saying on the Iman again, there was like, there was no problem, bro. Oh, okay. Okay. Well, perfect. Thank you. Sparta, it's whichever. It depends on which one you choose. You can send an email and I'll explain it to you perfectly. It depends on which one you choose. An ST model is ST model creates, or how can I explain ST model? ST model, I know how to explain it, but of course I don't want to give it all away for the mentorship members. That is very important. ST models is all fair value gaps. It's fair value gaps telling you everything that you need to know, and it's displacement in, displacement out. That's what I like to tell people. Yeah, I'll be back in this last video with this mic and this setup as well. I'll be back soon. I can't wait to be back, to be honest. Yeah, 100%, Mark. 100%. We all were there. I don't have TikTok. So if anyone is trying to pretend I'm me on TikTok, then it's not me. I don't have any TikTok account, but I should probably get a TikTok account just to prevent things from happening. Let me right now make a TikTok account, actually. And it's let me see. Yes, perfect. All right, I made a TikTok account, and my TikTok account is only RioIO. So again, my only name that I have everywhere is RioIO. That's it. So again, if someone is trying to scam you on TikTok, then it's not me. It really isn't me. Let me see. I have 2023 mentorship notes in Notion. Can you make a video like you make of 22 notes? I will contact you in email. Yeah, you can always contact me in email. The only thing is, I have not watched 2023 mentorship. So, not sure what kind of video I could make from it. 100% Z. You can make money from a funded account. 100%. Not financial advice, but yeah, for sure. Love that, Emrich. Exactly my thoughts as well. Thank you. Thank you. What do you do when you have two opposing fair value gap on a higher time frame giving conflicting bias? That's a great question. And usually what I tend to do, I wait for either fair value gap, one of them to be disrespected, to then continue higher. And if we have a fair value gap that is on the higher time frame, of course, then I want to trade off of that. Oh, my nose. It's such an annoying noise. I can't imagine what you might be listening to. Is it possible to make you with a Discord community? Are you opening new things? I have thought about potentially, but the thing is with free Discords and just open Discords is that they usually die down very quickly. And to be honest, I don't really have the time to manage a Discord full time where I answer a lot of questions. So that's also the difficult part. Because if I was just active in it, of course, it wouldn't really die down. But like, I don't really have the time to manage that as well. That's the thing. Hey, thank you, Sparta. Thank you. I am actually looking at that. It's very interesting. Thank you. Thank you. Yes, facts, Mark. Facts. Spectre Discord is great. But again, like I mentioned, I am personally not that active in it because I don't really have the time, which I do feel bad about, but I just, try my best. But Spectre Discord, the other guys, Ismail, Hugh, great guys. Great guys. Absolutely lovely people. Is there a way to know how deep price might stick into an imbalance? Not really. The only thing that then comes into my mind, is time. So, for example, what I mean by that is if we look at the trade example here on NASDAQ and we look at this trade example from last week, then right there, we just know it because of time right there. But do we know at that time that it's going to fill the imbalance completely, then continue lower? Not really. It just depends on what the 1 minute time frame or our entry pattern time frame is showing us right there. That is very important. Air conditioned. Are you still using funded account to make money? Investor and slowly funded as well. Yeah. Are you going to consider pricing of your membership to grab more members? I've been thinking about that. I'm not going to give discounts. That's just not really happening. And I'm also not going to decrease the price. That's also not really happening. But the thing is, I have been thinking about potentially making something for people, I don't know, that are just having a rough time with the currency they have in a country, etc. But that's also why I have the YouTube, because I truly, and again, the what is it? The content or the information I share on YouTube, it's truly enough. I wouldn't be making it otherwise. Really, Sean, that's insane. Actually, let me take a screenshot of that. I like that. That's insane. Ginger, yeah, I've been drinking some ginger as well, but don't know why. It probably is the air conditioning. Probably is, but I haven't turned on. But can't open a window, and I do love some fresh air. Although air conditioning is not really super fresh air, I do really like fresh air, or at least some air. So I'm not breathing in my own air again. Let me see. Perfect. You recently talked about building a business apart from trading. What are you looking forward to? Oh, of course, the mentorship in itself. And again, the mentorship is huge, or mentorships in general have a huge stereotype attached to them. But for me, it's also a nice business. As in, I like to build a business. I like to give value. I like to see you guys here in the live stream. I like to build that business and be connected with people. So for me, that's really nice. But eventually, I also what I really have been looking into, or what I looked into, and what I really like, is potentially a watch business. Just besides trading, of course, watch business you could argue is somewhat trading as well, but just different. but I really like that idea, or anything else, software potentially, doing something else, just really a business, building a business. I like the idea of building a business. For me, and I mentioned this as well in the tweet, trading is very boring for me. As in, trading itself, if I was not teaching, if I was not helping other people, it's extremely boring, because all I'm doing is I'm waiting for prices to hit certain levels, and right there I'm waiting for my entry pattern. In the meantime, I have a lot of free time, and that free time right now is getting occupied by the things I'm doing, by mentorship, by YouTube, by everything that I'm doing, because I'm a one-man show right now. So that is why I like it. Like, I don't know, just sort of keeps me going. So that is why I would always advise, try to find something that you can do besides trading as well. It's very important, in my opinion. Very important. Or when you're going to make meetup with that, we'd have to see about that. I would love to do a meetup eventually. I would love to see. I heard about 2024 where I was with Spectre as well. Just Hiu, Ismail, I don't know, maybe Kelvin as well. I think he's down to potentially go to Dubai as well, or another place. Would be nice. Jump on the names with me. MF, hey, love to see that. MF, oh man, might have to jump on the names, get some nice domain names here and there. That's a funny business though. I like that. You're currently traveling a lot, I guess. What are you buying with the money that you made? So I've always been because mostly it's just me saving up. Not really. If I do buy anything, it's more so, or it's an investment, or I do like to buy here and there. I like to buy watches. I don't really show them off, but I do like to buy watches as well. So that's what I like to, and I see them more so. Of course, I don't buy a watch because I think, oh, it's going to increase in price. No, I like because I really like watches. I love watches. But other than that, I'm more so saving or investing back into any business or anything. And traveling as well. Like, to be honest, I don't really like traveling, and I'm not traveling right now because I'm really because I thought I needed a vacation or I needed to travel. Not really. It's more so. My girlfriend is originally from Colombia, so her roots are in Colombia. So she wanted to go to Colombia, and this was the time we could go to Colombia together. And if it was up to me, then I wouldn't be in Colombia right now, because traveling, again, I like traveling, but the thing is with traveling, your whole routine changes, which I don't like. So it's very, and the internet might be a little bit different. It's just not ideal for me. So yeah, yes, that's the way I view it. Yeah, exactly, Ryan, and appreciate it a lot, by the way. And the thing as well with trading being boring is because trading is quite boring. Again, I have always preached that the learning phase of trading is truly the most exciting. That's why a lot of people stay stuck in the learning phase, because it's very exciting to learn something new about fair value gaps or learn something new about this. That's why trading itself, actually executing, is very boring. It's extremely boring process. So if it is boring and you're stuck and you're watching the chart constantly, then the thing is that you might force something because you're constantly watching the chart. You have too much time on your hands, which then leads to you forcing potentially something, which was what I had essentially. 100%, Joshua. 100%. You can copy it. It's in my Telegram actually. It's in my Telegram for the. It's in my Telegram. If you click on the pinned messages constantly, then you'll find the chart colors. I also made a reel on it actually. If you go to my Instagram or even my YouTube itself, I made a quick video on it. It should be pinned. It should be pinned on my Instagram. I am 22 years old, Mark. Face reveal soon, my friend. Soon we will have a face reveal. The mentorship already knows what my face looks like, but soon we will have a face reveal. At least I hope. I just clean my house while trading. Well, perfect. That's perfect. Yeah, that's also like, of course, it doesn't have to be business as long as it's some kind of hobby you can do besides it. It's playing guitar. I don't know. It's what I did for a while while trading, playing guitar. It's also funny. That's nice. I'm trying to get your attention to answer my question, but clearly I'm failing. No worries. No worries. Let me see. Did I miss it? I think I missed it. August 30 and August 10 and July 27 buy side sweep and going lower. Explanation, please. Let me see, my friend. Oh, which pair? Which pair are you actually talking about? On euro, US dollar. Ugh. What did you say about the AC? The problem with AC, the normally mold can build up inside. Yeah, exactly. Yeah, cool. Yeah, I'm still very young. I'm still very young. I am still young. Let me see. Well, you mentioned August. Let me anchor it, actually, to make it a little bit easier. You mentioned August 30, August 10, and July 27. Let's look. August 30. August 30, right there. Ah, this was this scenario. Yeah. I think overall, what we were seeing here is, because at that time, I remember I was still bearish. And the thing we need to understand is when we have two lags, there's two types of lags. You either have a lag. With a lag, I mean you have a lag, a swing high towards a swing low right there. That creates a lag. A lag has either a fair value gap in it or it doesn't have a fair value gap in it. When a lag doesn't have a fair value gap in it, like this lag, then getting swept right there is not a crazy thought. As in, right there, the lag is low probability because strong lags have fair value gaps in it. As in, this lag has a fair value gap in it. That lag, that high, is likely not getting swept because it has fair value gap in it. So the fair value gap is likely getting respected. This is no fair value gap in it. So that can be swept right there. Of course, at that time right there, you would go into low time. I remember at this time, I was personally looking at this fair value gap for a trade into that fair value gap, which didn't happen. Bit of a shame. Then eventually, we already dropped off right there. But that right there, ideally, I would have seen a sting into that fair value gap. But that right there, that is just a sweep of a low probability lag right there. Then on the 10th of August, where is that? Ah, it's this actually. It's this. Do we have something? Ooh, what am I doing? Perfect. There's something on the time frame above it. Did we sweep into that, or was that a different day? Let me see. No, it was that day. Yeah, so the sweep right there is just a weekly fair value gap. So that is what I mean actually with turtle sweeps and inducements, as in, yes, in this case, of course, yes, it's a little bit different, but in this case right there, it's just a sweep and a turtle sweep into a fair value gap, into a weekly fair value gap right there, to then continue lower right there. So that's how I would view that as well. Right there, you can just follow along with prices on the 4 hour as well, for example. Right here, this is what I always talk about. When in doubt, you wait for that 4 hour SD, the 4 hour fair value gap, right there. Perfectly fine trade to take. And as well, that one right there. Very nice, actually. July 27th. 27. Let me see. This one. That one right there. Perfect. Let me see. This one right here is, again, I just mentioned that swing high, swing low, fair value gap. That one right there, I would not expect a sweep. So once we do have that, I would not expect a sweep right there. So I need you to understand that the probability of that happening is lower. Once it does happen right there, and we do go into the lower time frame, the 4 hour, 4 hour fair value gap is lower, then again, we can say, all right, it's a sweep, perfect. Now, the only thing that would make me think that that sweep could happen is if we have news on that day. So if there was CPI, FOMC, or anything on that particular day, then I would say, all right, because we have a lot of volatility, that can happen. So then we would react. But at first moment, I'm not going to lie to you, I am very honest in this case, that I would not expect that sweep to happen. I would expect that fair value gap to get respected right there. So in this case, it's just more so, all right, that can happen. The only thing, the way I would personally see it coming is if, and I don't know that, so we would have to check, but I don't know that if that 27th of July had news, then I could see it potentially coming. How do I spot liquidity in the market? So liquidity is, the way I spot it is just swing highs, swing lows, but I don't necessarily, the only way I can spot it is liquidity for me is when we don't have fair value gaps. So everything besides fair value gaps, what you'll see here, fair value gap there is getting respected. Fair value gap right there is getting respected. So this high for me is not liquidity. But this high, what we just talked about, is liquidity. It's just a swing high. So liquidity is defined by swing highs, swing lows. And then it's important to know, does the lag have a fair value gap itself? If not, then it's likely liquidity. As well, liquidity is that high. Why is that high liquidity? Because it's hovering below a weekly fair value gap right there. So the weekly fair value gaps, or the fair value gaps in general, tell you a lot. My trend line settings, for sure. Let me see. First of all, if you don't know how to do the line straight, because I didn't know for a very long time, it's pressing Shift on your keyboard. And if you don't want that, then I also have the magnet on right there. I have it on weak because a strong magnet tends to mess around with the trend lines too much. I have it on weak right there, and then I drag right there. If I grab this point, press Shift, then it just anchors to that. Just a very, if someone doesn't know, because I didn't know for a very long time. Here I have that color right there, that color with 75% opacity. Thickness is the thinnest one actually. I don't have text. If I do have text, it's the 16 right there. That's basically it. And all this is off. Everything is off. This is actually new. I didn't see that. Or maybe I just didn't check the settings in a very long while. I didn't know this. That's pretty interesting actually. Nice. Pretty cool. Do you have a fun move bike? I wanted one actually. I wanted a fun move, but they are, how do you say it in English? They are bankrupt. They're done. Their company is done right now. So it's a bit of a shame. But I would like, but I've also heard stories, because my uncle has one, but also heard stories about them not being that great. All right. Then I'm going to end it here. We had 2 hours, I believe. 2 hours. It didn't feel like 2 hours. Felt like 30 minutes. All right, then I'm going to end it here. Again, remember what we talked about? We talked about a lot, but about the trading aspects, of course. So, yeah, exactly, Fabian. And so I will see you at the next one. I will be back, which means that we will have, during the week, another live stream. So we will have a live stream on Wednesday, most likely, or it will be just a separate video. But the main quality videos will be on a Friday, mostly. If it does happen that it's on a Saturday, then it will happen on a Saturday, of course. Then we have the standard, the usual live stream on a Sunday. And in between that, I will try to figure something out as well. So, thank you, everyone. Thank you for being here. And then I'll see you at the next one. Perfect. Thank you.